Hey everybody. All right, well, thank you for checking out today's video. I hope you all had a chance to see the intro video that I put together. If you haven't, just a real quick FYI for everyone. Let me start off by saying, from a disclaimer standpoint, I'm not a financial advisor. I am just someone who likes to code and who's been interested in trading for some time and ultimately would like to make trading my full-time career. And one of the ways I want to do that is by leveraging technical analysis and hopefully using that in my trading plan. And so, as I started to learn and code and hone my skills, I realized that there's a lot of strategies that are out there that people claim make you tons of money, and you can just turn your brain off and trade with it, and overnight you're able to just print money and become an overnight millionaire. And so I realized that's not the case, and so that's why I wanted to make this channel, so we can go ahead and review those strategies and see with complete objective eyes that, is this something that is actually meaningful and legitimate and real, or is it bogus, right? And so, excited to show you guys the results and take you on our journey together. And hopefully, along the way, maybe we do find something that is legitimate and can help us trade with an edge. And so, yeah, let's jump into it. So the first strategy that I am showing you guys today is called the Golden Cross strategy. And what that really is that it's a really popular strategy that people talk about, which is when the 50 EMA crosses over the 200 EMA. And when that takes place, the idea is that that's when you initiate a buy. And then when the 50 EMA crosses the 200 EMA again on the downside, that's when you exit the trade. And you can see here that I actually have two setups, right? So one is where we close the long position, and then we also do a short position. So one of the things I was thinking of is that, when I walk through the code and walk through the results with you all, that we can also just see what does it look like if we were to also do a short, and how does that perform in the market. So yeah, and so it's like I said, it's a really popular strategy that everyone talks about all the time, and I figured it'll be a great way for us to start off, so you can see what it looks like. So why don't we just jump straight into the results, and I'll show you. This is how this strategy performed. Okay, and in it you can see that you had about 195%, close to 195% results, a return in terms of profit. So in this one, and I'll show you the settings that I use in a second, but in this one, basically what I'm saying is that if I invested $1,000, I would have returned close to $2,000. So not bad, right? Pretty good results. Something that we like to see. So you can see here that we did about 16 trades in total. The profitability, or in terms of the number of trades that we took, how often were we profitable? Well, about 50% of the time. So about 8 of those trades were profitable. Our profit factor was 1.6. Our max drawdown was almost 50%. So at one given point in time, we lost almost 50% of our portfolio along this journey, right? And that's one of the reasons why I also like looking at the different values that are listed here, namely this one, because it's important to kind of have a realization of things don't just only go up, right? And of course you can see that on the chart itself, but even when you trade with technical analysis, I mean, sure, you can define risk to reward ratios and things like that, but the reality is, though, that when you have a strategy that you believe in and that you think is going to work for you, it is it is a reality of that it will go down, and you will be wrong over some periods of time, right? And again, it's if you have conviction, if you have a belief that your strategy is legitimate, well, then you can withstand these drawdowns and be okay with that, right? Similar to when you believe in the companies that you're investing in, or the index funds that you're investing in, or what have you, cryptocurrency, what have you. If you believe in that, then you can withstand the drawdowns, and I think that's important to keep be aware of and keep in mind. From an average trade perspective, you had about a 12.16% growth per trade. So it's pretty nice. So, across these 16 trades that we took, even though only half were profitable, if you look at the overall average of all 16, you had about a 12.16% growth. And the average number of bars per trade was 339. And so what that means is that since I'm on the daily chart, each bar is equivalent to 1 day. And so this is saying that we were in the trade for an average of 339 days, essentially. So, you can see here, like I said, close to 200%, not bad, right? So let's look into the settings and the details and see how we performed against the buy and hold strategy, because I think that's a very important metric, especially for SPY, to compare what it looks like against buy and hold, right? I mean, is it in your better interest to be actively trading and managing this account where you have to be looking at this on a regular basis, and then when the signal fires, you have to go into your account and either perform a buy or sell or what have you, or should you just buy it at some point, park your money, and then walk away, right? And which one's better? So let's look at that. So the cool thing is TradingView has a mechanism or a means for you to be able to compare, and so we can see here. There's right there, buy and hold return. And since I'm already looking at SPY, right, the index fund, you can see that if we were to buy and hold, our return would have been over 300%, meaning if we had invested $1,000, our return, our growth would have been $3,000, a little over. So what that tells me is that this strategy isn't better than buy and hold. And in fact, it's in your better interest to buy and hold. So here you can see it's our first dud in the strategy evaluation videos that we'll be doing. And so it's good to be aware, right? Because, I mean, I don't know how many of you have come across the golden crossover strategy, but it's something that I was told for many years was this golden goose. And you can perform better than the markets, and you'll have less drawdown in the markets, and so on and so forth. But as you can see, we had about 50% drawdown, right? And buy and hold did a lot better, right? And so that to me is a little bit of a concern, right? That the golden crossover isn't really that much better. But what I did was we can also take a look at the settings that we're using. So why don't we go ahead and jump into the settings, and I'll talk you through that. And then what I'll do is I'll talk to you through the code as well. So first setting here is called short also. And what that means is that it's just going to show you that when we enable the ability to go short in a position. So for those of you who are unaware, long is when you purchase shares and you hold them to go to the long side, right? And then this little purple arrow means that we're closing that position, meaning we're selling those shares. Short, however, means that we actually sell first with the expectation that we will buy back later. So in this scenario, this purple one means that we closed a long position, we opened a short position, meaning we sold shares, and then here we closed that short position, meaning we purchased shares, and then we also purchased more to open a long position. So that's kind of what it looks like. But if I put this into a 0, what happens is you'll see all the longs all the shorts are gone. And so what that means is that when you are in a position of the 50 crosses below the 200, well, in that scenario, you are just closing your position. You're no longer opening a short position. So that's why I put that setting there, just so we can kind of compare and see what that looks like. And so you can actually even see in the results as well. TradingView is pretty cool where they're able to even show you that difference as well. So if I have a short position entered here, then you can see how our returns on the long and on the short. But if we bring that down, you can see how that changes the sort of scheme of things. Okay, pretty cool. I like that feature just because it kind of makes things pretty nice. And the other thing I want to just point out is another reason why I kind of wanted to do the short thing was because, in last couple of years, we've been just seeing things rip and go up like crazy. And recently we've been starting to see things come down. I just wanted to see that, okay, well, historically in scenarios like that, is it better for you to go into a short position and see where things go? So that was kind of the reasoning and logic behind that. All right, so other settings that I put into place. I like having this sort of boiler in my scripts, and I plan to do it in the future unless you guys want me to do something differently. But what this is doing is that it helps to establish a sort of start point that we can dictate, right? So if we wanted to, try out different areas where we felt the economy wasn't doing well or was doing really well or was atop of something, right, then we can modify that start point. And so just as an example, let's say we wanted to, well, why don't we just go back in time a little bit and say, let's say we wanted to, instead of getting all of this data back into 2000, right, as far back as we can go, what if I said that, hey, you know what, why don't we start here, okay? Let's just say July 1st, 2015, okay? So when doing that, if I just come into here, my start date, say July 15, 2015. Actually, I said July 1st, sorry about that. So what that does is that it eliminates all of that previous testing, right? And so I like that because, again, we can kind of define, hey, where do we want our start and stop period to be, right? As far back as the data allows for us to go, of course. And it'll help us to sort of navigate, okay, are we not picking and choosing data that just looks good? Because again, that was one of the reasons why I wanted to start this channel. I want this to be as objective as possible and as helpful as possible to all of you. That, hey, you know, is this information meaningful? Does it stand the test of time? Does it work in different market conditions and so on, right? So that's why I wanted to implement that. And so let's go back and again, just go back to the initial settings so we can keep comparing our data. All right, and so end month, I just have that going until, you know, into the future, because then that what it does in doing that is it makes it so that, you know, the trades are still active and it's still happening because we're still in the present tense. And then otherwise in the settings, I have, you know, start hour, minute for end hour and minute as well. And the reason for that is just because, you know, when we start looking into strategies that happen on lower time frames, I want to sort of make sure that we're trading within the paradigms that we as retail investors can trade in. So meaning we don't want to be trading, or we don't want to be, you know, when we're checking algorithmically, I should say, looking at trades that are happening pre and post market, especially for those of us who don't have access to that, who can't make those trades pre and post market. So what I did was I just made this so that it stays within the active trading hours. I mean, I'm sure some of you will have that access, and if I find that the majority of my followers would prefer to keep those trades as part of our review or overlook, then I'll be happy to just, you know, put these back down to 0, and then we can work with that scheme as well. But what this is just simply saying is that, you know, markets open 9:30 Eastern, close at 4 p.m. Eastern, so, you know, we just keep that like that for now. And again, like I said, if a lot of you are saying that, hey, you prefer them to, you also want pre and post market trades as well, then sure, I can put that in. So that's as far as the settings go. The other kind of cool thing about TradingView is that you also have the means to sort of figure out, hey, how exactly can you replicate or simulate a real-time or real-life trading scenario? So what that means is, right now what I said was initial capital is $1,000, right? Base currency is just default, so USD. Order size, I said here 100% of equity. And so what that means is that it's saying that, hey, whatever profit and loss that I make in this trade, right, that's going to help us to determine how much I go back into the trade for the next one. So for example, just take a look at some of these numbers right here, right? And so if I were to change this to say USD and $1,000, you'll see that these numbers have changed dramatically. And the reason for that is because now the rule is, hey, every time you go into a position, trade with $1,000, whether you lost money on the previous trade or whether you made money in the previous trade, just trade with $1,000. 100% of equity just means, hey, if I made money, well then use that money that I made and invest into the next one, right? And so that's kind of why I like to keep it 100%, because it's just saying that, hey, I'm going to put in the entire amount of my capital back into the trade. And then pyramiding is just if you were to create a strategy, or if we were to create a strategy into the future where we're saying, hey, don't, so what that means is, let's say, for example, we had a strategy where the golden crossover was happening multiple times in a row. So let's just say it crossed here, went down and crossed again. So instead of closing our position, right, and then reopening when it comes here or something like that, we could do it. So we say, well, actually, yeah, we could just say that, you know, open here, right? And then we don't close, and then we open another one here. So pyramiding will allow us to essentially say open 1, open 2, open as many as you want, right? So if you had 2, then you could say open 2 positions, right? And what you could do then is you have to kind of work it out in your head. So if I was saying to do pyramiding 2, well, then I have to use 50% of my equity, right? Because now I'm doing 2 trades. And like that's essentially what you would want to do, because in that way what you're doing is you're confirming that you're not going over your initial capital amount or the money that you have to create your trades, right? So that, yeah, just some settings that I like to use and mess around with. And of course, commission and verify price limit, all these other things you can play around with if you're interested in do so. I don't mess with it too much, just because by adding commission and all other things, then we want to see what the results look like in a simulated trading environment, right? And so I'm hoping that for the vast majority of you, if you're using commission-free trading, you're in the retail space, so on, then you wouldn't have to worry about a lot of these other factors. Okay, so next, let me just take you through my code, right? So you can see here, right, that we create a strategy, okay, and we call it the Golden Cross, right? This is your title, right? And that title is what's going to be seen here, Golden Cross, right? So you can see that overlay equaling true just means that it will put my trades or whatever items that I plot onto the main screen, okay? And there's a bunch of other ones. If you're all interested in me going into a deeper dive into what this looks like and so on and so forth, I'm happy to do that. And in fear of making this video way too long, I won't go through every nitty-gritty detail right now. Again, if you're interested in doing that, we can make a separate video where I just go into what each individual item means, and hopefully even enable you all to be able to feel more comfortable using PineScript, because I know for myself I had to learn all of this from scratch, just looking at documentation and so on. And for someone whose primary career isn't coding, just someone who enjoys it, it definitely was a bit of a learning curve. But I do want to make it easier for the next people who are interested in if you have interesting ideas and so on. We can talk about this more. But anyways, so here I just create the variables that were shown, right, and they're all set up as inputs, right, and then here we just sort of work on if this is happening in the conditions, right? So this is just saying that, hey, if the actual time has increased or gone beyond your start point, then you can initiate and start that, right? And as long as you're before the end date, then you can, that becomes true as well, right? And so that helps us to create those parameters in this if statement, okay, that, hey, are we within the elements that we cared about in terms of the time window that we care about? And so, yeah, and then after that, we just do a crossover for 50 and 200, or a cross under for 50 and 200. And so what I did here was in the short also condition, that's where I said, hey, if I'm looking at shorts, great, then perform the areas where we can open and close short positions, right? Otherwise, just keep moving along. And then if we're after the end date, I'm just saying to please go ahead and close everything, right? So then that way, if I wanted to, we can just end it instead of having an open trade at the end of it all. So just some things we can mess around with. And of course, as things get more complex, once we start looking at risk to reward ratios and things of that nature, we'll also have to worry about how do we condition that into these strategies, into these programs. But for now, pretty straightforward, right? And nothing too scary, nothing too overburdening or concerning for anyone. So I think this is also a great strategy if you're considering looking into learning TradingView, learning PineScript and the editor. This is a great example just for you to mess with. And of course, also, if you don't even have this, I mean, if you look at just these conditions, these are built-in commands, EMA, crossover, cross under. So, this is like 15 lines of code, right? So it's very, very straightforward, easy, simple. And of course, if any of you need help, you can feel free to reach out to me in the comments or what have you, and we can look at that together, right? I want to help you, I want to enable you, make all of this better. So, all right, so that's TradingView. That's all the settings that we use and all that good stuff. So now, once again, let's look at the results, right? So again, we can say that the buy and hold strategy perform better when you include shorts, right? So now why don't we go ahead and take shorts out and see how we performed. Well, you can see here, we actually did a little bit better, right? 312%. Buy and hold strategy, 500%. So you can see here that is a concern, right? We did better when we don't use shorts, right? And that kind of helps me to realize also, even while I'm recording this video, that in economic downturns or when things are going down and you're using or considering using the Golden Cross strategy, sure, it might help you to mitigate some risk, but not that great, because if you look at that, right here, you can see, well, in this big downturn period, it kind of reacted pretty late, and then same with COVID, right? It actually reacted really late at the very bottom, and then that's when it recovered. So it seems to be like a strategy that does respond a little late. I mean, sure, you might have saved some capital here and some fear here, and that's kind of a nice thing about these kind of technical analysis indicators, that sure, you might not be able to out perform the market, but hopefully you can help to mitigate some of your risk, even though I would say in this particular instance it wasn't great, right? So, food for thought for you all. For me, after reviewing this, especially on the daily time frame, I would call this strategy 50, the golden crossover, 50 over 200, a bust in my opinion. But again, you're completely, you can make your own assessment analysis, what you feel comfortable with in your financial situation and what you like to employ. So while we're here and we're messing with things, why don't I try changing this up a little bit, right? So what if I did 20? Okay, and this is all just real-time live, so you can see what's for yourselves what this looks like. So we can see here when I change it to 20 that, hey, wow, we actually performed a little bit safer, right, in 2018, and a little bit better. I wouldn't even say better, because we were, like, I think around here. So I would say you got out of the trade at around the same time. But yeah, sure, fine. You saved yourself from a little bit of fear in that area, right? You seem to have lost a little bit of capital here in this trade, right? So, you can massage however you want to massage. You can change whatever settings you want to change that you think will help you have a better edge. But you can see that we're taking a lot more trades than we were before. And let's see, is it actually even helping us in any way? And you can see that, no, it's not, right? So you can see for yourselves that, we actually made less when using the 20. So, again, I'm happy to make more modifications to this strategy, make more changes to it. But from what I can see here, 50 over 200 did nothing for me. Wasn't great, wasn't better than buy and hold. And if I modified that to 20, even worse. But, again, I'm really open to seeing what your feedback is, what your thoughts are and responses. And, this is to me a forum, right? So if you have other ideas and other thoughts, and if you want me to try on different time frames, so on, I'm happy to do that too. If you want these videos to be shorter and more to the point, I'm happy to do that too, right? I mean, I want this to be as beneficial as possible to my viewers and my followers, because I want you to be engaged. I want you to be coming back for more and getting excited about these videos, right? So let me know. Feel free to comment, and we can iterate together, and I would appreciate your feedback. And at the end of the day, obviously, if you guys can like, subscribe, and follow, then that'll help me with producing more content, and will help me to get that feedback that I'm looking for. So, all right, well, I'll see you all in the next video. Of course, if you have a trading strategy or idea or suggestion that you want me to do, then feel free to put that in the comments as well. Otherwise, I'll be just kind of scouring the web and YouTube and other influencers, and what they're promising is a very profitable strategy, and we'll likely take those ideas and make a code out of that and show you the results in my next video. Thanks everyone for watching, and catch you in the next video. Bye.